Hey everyone, the market's been bouncing the last couple of days after coming off of this double top here on the S&P 500. We're looking at the SPY ETF. We bounced right off of this 540 strike, coming up into the 550 strike. These are two major levels, both technically and from a gamma exposure perspective, that we've been watching. A breakout above this 550 level, and it looks like bulls will be back in control. A breakdown through the 540 level, and it looks like bears are really going to be ramping up, potentially moving back to the lows.
Okay, yeah, thanks, Anthony. One thing that I was looking at from a kind of a bullish standpoint is the DIA, the Dow. I noticed when we had the larger pullback recently in the S&P and the Nasdaq, the Dow actually, basically emerged unscathed and was pretty close to highs. Our gamma levels showed DIA to be in a dealer cluster zone, and this 420 sticks out. 418 is actually a pretty large cluster. And so we're kind of right at a spot where I would imminently expect at least the potential for this thing to rebound from here. We obviously want to watch out if it does break below this green box, probably below 404, and it starts to be a little bit more concerning.
Great, thanks, Sean. Here's a heat map of the performance by sector for today. You can see pretty muted performance overall. We've got some decent moves in NVIDIA, Microsoft, Amazon, and Tesla. But if we just go back here to the performance over the past week, you can see a strikingly different picture. Over the past week, most of the gains were made in some retail names, consumer non-durables, utilities, some commercial services, and some healthcare. And this is really just going to show that over the past week and really over the past month, money has been flowing into defensive sectors. And let me just drill down here really quick for you on the sector analysis of the market. If we look here at this particular column over the past 3 months, you can see most of the larger gains have been in consumer durables, utilities, consumer non-durables, communications. Again, these are all defensive names. So money has been quietly flowing over the last quarter into these defensive sectors. We see that continuing over the past month. And so if we just look at the change percentage for today, there's a lot of sectors that have been doing really well today. But one of the things that worries me is that on an up day when the market is bouncing, we're still seeing money flowing into utilities, consumer non-durables, communications, all of the sectors where money has been flowing in the past several months during the increased volatility and the sector rotations that we've been watching. So, that's kind of just a red flag. It appears that investors and institutional market participants are switching gears and really increasing the defensiveness of their portfolios. And I think that's being reflected here in the sector performance.
Thanks, Anthony. Let's take a look at a few tickers that caught our attention as we were looking at potential opportunities. And I'll start out with USO. Very ugly chart, but at the same time, it's very oversold. And you can see today's candle. If you look down here, the lower blue line, that's the bottom Keltner channel. And we see that 65.87 is that line. And we basically, today's candle almost bounced right off that weekly channel line. It looks very oversold on the daily chart, but yes, it's a downtrend, and it's been in a downtrend really since July. But oil's a commodity, not likely that it's going to zero. What I'm going to do is switch over here to looking at the gamma levels, because maybe we can get a little help in figuring out where this thing might bounce. And we look at the gamma levels, so we got very close to this dealer cluster zone. So anywhere from 64 to 66. I'm looking for an imminent bounce as long as this 64 area holds. And in our targets, well, we have this gamma cluster up at 72. I'm going to see what the volume looked like today. So we had, look at this volume at 70, 78 and also 74. but I think there's a pretty strong chance of some sort of a bounce from this dealer cluster area.
Thanks, Sean. Yeah, the next name I want to look at is Lululemon. Lululemon really getting hit hard all of 2024, really struggling to find any kind of support zone to get a quick bounce. The levels I'm going to be watching for tomorrow and really into the rest of this week is going to be this 240 zone here. And, this to me looks like a traditional dead cat bounce. If we break the 240, lower prices look likely. And if we just take a look at the gamma exposure data graph for Lululemon, you can see the 240 level is also a large negative gamma exposure level. So a break below this 240 strike could really exacerbate the selling. We're already in negative gamma. You can see we're way over here on the extreme end of the range. I think if this 240 level breaks, negative gamma basically tells us that dealers are going to be forced to sell further into the sell-off. And so Lululemon, the 240 level is going to be a big one to watch, I think, tomorrow and in this week.
All right, Anthony, we'll take a look at GLD. GLD has been in a really solid uptrend ever since June. On the weekly chart, we just got back above this whole moving average, opens the door to 235 plus, as long as that 232 area holds. And we'll go over to the gamma exposure. Extreme positive GEX, which can be a contrarian signal, but we have this big gamma cluster at 235 that looks pretty solid, even maybe an off chance to make it to 240. So that seems like a very strong probability that we do reach that 235 area.
The next name I want to look at is Tesla. Tesla has really interesting formation here on the chart. 230 level looks really interesting to me. Basically, since July, this has been an interesting area of supply and demand. You can see multiple places. There was a big breakout, of course, back at the beginning of July. This was also a resistance level as we try to bounce back at the end of July, 2 different times. This zone with a pretty steep rejection, another bounce into it. Another bounce into it here at the end of August, and here we are again. And so I want to be watching the 230 level, how Tesla's price reacts around that zone if it gets there tomorrow. And just looking at the gamma exposure data graph, we're coming right into the big 230 strike here on Tesla, which is the largest gamma exposure concentration. Total gamma is positive. We flipped into positive gamma exposure just a few days ago. You can see we're sitting here at the 215 level. So trading at 226.17 as of the close today. It looks like Tesla is in a buy the dip, sell the rip environment. And I think this is a good signal that, especially if the market continues trading in this range, Tesla could have a good probability of moving higher through this 230 level over the coming days. If you guys are interested in continuing the discussion with us in our community Discord, I'll put a link down in the description below. Come on in and say hi. If you're interested in checking out our data and analytics through our GEX dashboard, you can head over to geeksoffinance.com. You'll get access to our gamma exposure dashboard as well as our Geek University, which is a 5-hour option strategy course. So definitely check that out when you get a chance. Thanks so much, everybody, for watching. We'll see you guys in the next video.